The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Monday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you have markets somewhat mixed. We have the S&P up by 5 points this morning, but we were higher at about 7:30 a.m. We were about 10 points higher at about 41.15. Right now, we're trading just above 4,100, 41.04 in the S&Ps. NASDAQ 100, we're positive by 46 points. You were as high as about 12,430. Yeah, 12,000, let's get the high, 12,433. So we've backed off about 40 points from that high in the last hour and a half. We get the Dow slightly in the red this morning, under 34,000, 33,888. And we got the Russell flat. Crude, quite the week last week. Crude volatility continuing this morning. We were just traded, man, from 78.50 up to almost 80, back to 79. And right now you're trading at $79.30 for the price of crude. You get the gold contract backing off a bit. Quite the acceleration last week from 1902 to 1863. We're chopping around a pretty similar area in the gold contract at 1869 right now. We jump to notes and bonds. What do we got? We got a little bit of higher price and lower yield, but all things considered, man, you back things up on the daily. Quite a little pullback we've had. You go back to the high we had February 2nd, and you had a high print, folks, of 116. You are down more than 3 full points in the 10-year. That has caused yields to rise with the 10-year. 3.72%, the yield on the 10-year. You want to take a look at the 2-year? There's your pullback on the 2-year, man. Pull the 2-year from 103.04 to 102.05, and you jump to the 30-year right now. Yeah, still well outside of that channel line, but backing off at about 127. And you talk about moves. The 30-year was just trading on almost 133. And we jump over to the VIX as we kick off another trading week. We get CPI data tomorrow. VIX sitting at 2140, quite a little spike from where we were. And what was the date that we were there, folks? February 2nd. Pay attention. The reason why I did that is because what did we just do, right? We just did the 10-year. Where was the 10-year on February 2nd? 116. Where is it now? 112.24. Where was the VIX on February 2nd at a time when we had the 10-year at low rates? Where was it? 1706. What's happened since then? 2141. And you back up to the S&P, on that same similar correlation. There's your February 2nd, folks, the spike high of 4208. So what did we just do? We just walked you through yields, the market, and the VIX, all of them completely combined together. With what are we talking about there? We're talking about yields mattering, folks, to the market, to the VIX, etc. And we kick off an important week with CPI data tomorrow. We got a lot of Fed speak as well. We're going to jump into it. We've talked a lot about, this gentleman, Morgan Stanley's Wilson, right? But he's been dead on. I like a lot of what he says. And Bloomberg does as well, because they push him out there, but he's been right, man. And he makes a lot of sense, folks. This is why I talk about it. You know, there's a lot of differing views. We like to combine the fundamental with the technical aspect of things. We're sitting at 4,100 on the S&Ps, man. Pretty lofty levels, considering the numbers that we still have going on for inflation. The attitude of the Fed. Chairman Powell has said we need to keep raising rates multiple times. Okay, with that in mind, where we are, where inflation is, all things considered, 4,100, not that bad on the S&Ps. That's kind of what he hints at in here. Strategist expects bear market bottom to be reached in the spring. Now, he's only looking for 3,900 end of year, man. So this is not some doom and gloom forecast, okay? While the recent move higher in front-end rates is supportive of the notion that the Fed may remain restrictive for longer than appreciated, the equity market is refusing to accept this reality. Now, I just walked you through the markets, the yields, the VIX, right, to see how they are all correlated, even from February 2nd, where we are. But the move has been pretty quick and pretty substantial in yields, and I'm not sure you've seen that same substantial move in equities. I mean, just jumping right back real quick, folks. We're going to back up this chart a little bit. We're going to take off that Fibonacci for some clarity. All things considered, I mean, we're pretty much pushing the highest levels we've seen. Yeah, you have a little bit of a pullback here, right? But what have we done? All we've done is pull back to the area that we were at December 1st. Okay, all things considered, the move that we've had in yields as the market has somewhat accepted, and this is what he says, the market has somewhat accepted the fact that the Fed might be higher for longer, okay? But Wilson, so he was a bear who correctly predicted last year's sell-off, expects deteriorating fundamentals along with Fed hikes that are coming at the same time as an earnings recession to drive equities to an ultimate low this spring. Price is about as disconnected from reality as it's been during this bear market. Take that for what it's worth. Just one man's opinion. I'm sure it's a team of men and women's opinion in terms of that analyst out there. But last week, yields on the 2-year note exceeded the 10-year yields by the most since the early 80s, a sign of flagging confidence in the economy's ability to withstand additional rate increases. Meanwhile, U.S. equities have seen one of the strongest starts to the year on record. I mean, pair those two, right? That's not even the end of the sentence. Though the rally has started to cool as Fed Chair Jerome Powell's outlook for further rate increases weighed on sentiment. Well, I just showed you on the charts how that pullback has been. What I'm trying to express is the ability for potentially things to go a little bit more array than maybe the market is looking at here. So he's talking about 3,900. That's about a 4.7% drop from where we are right now. Now, tomorrow we get CPI data. The market is going to look right to that data right now, folks, okay? We already have some equities that are moving this morning, but nonetheless, the risk reward is as poor as it's been at any time during this bear market. The reality for equities is that monetary policy remains in restrictive territory in the context of an earnings recession that has now begun in earnest. Yeah. Now, on the flip side of that, you have Goldman strategists raised global stocks to neutral. Not exactly a huge endorsement, but raising them to neutral from underweight over the next 3 months, citing less upside risk for bond yields and more confidence in a U.S. soft landing. That said, he remains selective. Now, this is the gentleman they're talking about from Goldman, Christian Mueller-Glissman. Higher valuations and more optimistic growth sentiment increases the risk of equity drawdowns. Yeah. So that was an interesting one. And, you got it. Context is important, folks, okay? If you're sitting at 3,500 risk reward, yeah, you better believe there might be some upside. But sitting at 41 to 4,200 right now with everything we're dealing with, folks, I've said it a few times before. I feel like the calculation in the market right now is almost the bull case, which is predicting that things are back to normal. The analysts are correct. We can model out inflation in more normal times, okay? It's just maybe not how it's going to play out. I mean, we've seen over and over in this pandemic over the last 3 years, whatever is shaping this economy, okay, and there are a number of factors that are all combining to some degree. The impact on inflation, on growth, on recession, on earnings, on margins, right, on costs across the board. People have been magnificently wrong. Magnificently wrong. I don't know why you make the case that everything's going to go smooth sailing from here on out. There's a lot of factors in this economy that are still shaping things. We got currencies that are still experiencing some severe volatility, and let's jump around to some of those currencies as we wrap up this first segment. You jump to the dollar index. You talk about some volatility. Now, what's been happening? What's the date on the charts? February 2nd. I mean, everything is so interrelated in this market, folks. The dollar, right, goes to 101. What's happened since then? Well, since then, we've had yields rise. We've had dollar strengthen. We've had the VIX rise. We've had the market pull back. And yeah, that's only the beginning of potentially where we go. And where did it bounce from? Right at the 618. Stay tuned, folks. Lots to talk about on this Monday. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&Ps up by 5 points right now, trading at 4104. We get the NASDAQ up by 43. Dow off by 5 right now. Jumping around to what else we have pulled up here right now. Excuse me 1 second while we go in. Let's take a look at some of the companies that are already moving this morning. And jumping around. Let's see, we got Ralph Lauren. Yeah. We're going to wait for some earnings companies. Caterpillar's a little bit lower. We got upgrades and downgrades. Caterpillar, let's see, gets Baird downgraded Caterpillar to neutral from outperform. Caterpillar is nearing a cyclical pivot point, and that revenue growth is set to slow. Well, I mean, you look at the run this thing's had, folks, from 160 to 260. Okay, you better believe that everything. I mean, Kevin Hincks, we talk to him every Tuesday, Wednesday, and Thursday, and he's got a great line, man. At a certain price, I'd be a buyer of any equity. At a certain price, I'd be a seller of any equity, because things can get overbought and oversold no matter how good or bad a company is. And it's a great expression because it's so true. And maybe that's a little bit of what's happening now, man, as this run from 160 to 260 in Caterpillar, we're backing off a bit, and you're going to drop about $4 on the open as they get a downgrade from Baird. Let's see. So you got Facebook. They're going to be having some more layoffs. Oh, it's not Facebook anymore. It's Meta. Shame on me. They're up by $3. You talk about some volatility on this equity, man. Yeah, so they catch a little bit of a lift. The Financial Times reported it's planning a fresh round of layoffs after it last let go 11,000 employees in November. So the market liking that they're trimming things even more. Expenses. Yeah, quite an earnings for them last week. Was it 2 weeks ago already? It was 2 weeks ago already. Remarkable. 2 weeks ago, as they kicked off almost earnings season. From about 150 to 200, we've backed off from there. Let's just see. In terms of that move we had higher, the gap higher on their earnings numbers. Yeah, depending on where you take this thing, we're already accelerating past the 382 of that move that we just made on their earnings. But nonetheless, Facebook gets a little bit of a lift this morning. All right, we got to talk about it. Why not? Let's talk about the Super Bowl, man. Congrats to Patrick Mahomes, Kelsey, and the whole Kansas City Chiefs. A 38-35 victory. Great Super Bowl. Up until the last few minutes, unfortunately. Tough call if you were watching it. Maybe you were. Maybe you heard about it already this morning. Absolutely phenomenal Super Bowl, man. 35-35 Philly. They get the touchdown, right? They get the 2-point conversion to tie things, and KC is going down the field. They get a 3rd down, and what happens? They get a holding penalty, and it was a tough call, man. It was a pretty light call, pretty soft call. It's just unfortunate when you see all the work that goes in for those people on that field that's somehow what decides it, but that's how it goes. And guess what? If you don't want to be in that spot, then don't put yourself in that spot, Philly. You know, that's easy to say as a non-Philly fan, man. I'd be going crazy if I was a Philly fan because that was a light call. And it's a bummer, but hey, that's how it goes. And, tough field out there too, right? What was going on with that Arizona field for people watching it? Seems like the NFL, man, for all the cash they got, they should really be able to put together a field that isn't just a complete mess. Yeah, and seems like grass. This day and age, it's too bad they just can't do grass, man, because no matter what you tell me, folks, you see the injuries, you just step on it yourself. You're never going to be able to make something as good as nature itself, like grass. You're never going to be able to do it, okay? We can get close, but you're never going to be able to do it. And as long as you can't get to that same degree, these players are stuck, you know, sitting on that field that's not grass. And last night was a true demonstration, even on the highest platform, right, that, yeah, they couldn't put together a good field just for the players themselves. Inflation's falling. Where it lands depends on these things. Goods, shelter, and other services could tug consumer prices in different directions this year. Interesting article this morning on the Journal, okay? Now, the end of distressingly high inflation is coming to view. CPI gained 6.5% in December. I think we're looking for a number of about 0.5% tomorrow. Inflation is far above the Fed's 2% target. Yeah. Even excluding food and energy, core inflation, 5.7% in December. Excluding food and energy. These are the numbers to keep in mind when everybody seems to get a little bit over their skis in terms of the Fed's journey and how we're going to be cutting in X months, et cetera. The market has now come to terms that, you know what, maybe we're not going to be cutting this year, okay? But folks, read it again. Inflation, not even talking about food and energy, which are just soaring, okay? 5.7%. Yeah. Who's right in terms of where things go depends on 3 sectors: goods, shelter, and other services, excluding food and energy. Different forces reflecting, all right, goods, when you talk about where you are here, the surge is over, supply chains have mostly healed, consumer demand has shifted back towards services from goods, core goods prices up just 2.1% in the year through December, okay, contributing 0.5 percentage points to the CPI's 6.5% increase, right? So check that out. When you're talking about goods, okay, you had it driving in February 2.5% of the 7.9. Now it's only representing 0.5% of the 6.5. For the 3 months ended December, core goods prices actually fell. Did you get that one? For the 3 months ending in December, goods prices actually fell at 4.8%. Oh, come on, load. There we go. Core goods, you're talking about in the blue here, and other, you're talking about in the light blue. Nonetheless, you see the trend, man, where they're going, right? Now, rent deflation. Wait for it. Soaring demand for houses and apartments, okay? Shelter, huge component of CPI. More than half. Soaring demand for houses and apartments from low interest rates and remote working caused shelter to contribute more than half of December's 5.7% core CPI inflation. Yeah. You keep your eye on that one. Now, this is part of the reason why, okay, that the Fed prefers the PCE versus the CPI, because the PCE encapsulates everything that you use, essentially, even if you are not paying for it directly. It's what you're consuming, okay, versus the Consumer Price Index, which is what products that you are actually paying for. A good example of that is employer-provided health care. Okay, that is reflected in PCE because it's a good that employees are consuming even though the companies are paying for it. That is something that is not in CPI. So they differ in a little degree. That's the best example of how they do. We're all getting a lesson right now in inflation and the statistics that go forward. They expect this number, okay, to continue rising through the spring, but then to decelerate. Well, that's a great plan. We'll see where it goes, but already they're saying it's going to continue accelerating. There's an extreme lag in rentals, man. Some people are still in their place. You know, as somebody, I have a duplex, folks. Okay, so I'm a landlord. I rent out. Let me tell you something, man. You got a good tenant, I'm most of the time, and this is pre-pandemic I'm talking about, okay? But I am not raising the rent every year or two. I'm just not doing it. Okay, maybe if they stick around for 5 or 10 years, I'm eventually going to come to them and say, hey, listen, I got to raise the rent. You don't want to pay it. That's fine. All right, I'll get another tenant that will to get up to market rates. But many times, if someone's in there 2, 3, or 4 years, they're a good tenant, I'm not jacking that rent up just yet because it's not worth it for me to, number one, lose a good tenant that pays on time, respects your property, etc., right? But then it's actually not worth it if you just go 1 month. Let's say you're renting out at $1,800 a month, okay, which is a fairly probably reasonable price for a 2-bedroom, 2-bath, 2-bedroom, 1-bath somewhere where you are in Tampa. $1,800 a month. You miss 1 month of rent, then it negates the entire raise to $1,950. We'll go over a little bit more. I think that's the risk. Let me get the math. Yeah, I think that's the math. We'll pull it up. It's going to lag, folks. We'll finish this conversation. We'll be back for the open. Stay tuned.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, welcome back, folks. We got markets open. You catch a little bit of a lift. You got the S&P's up by 8 points right now. NASDAQ 100, you're positive by 50. You get the Dow up 45 and the Russell into the positive by 1. We jump over to gold, off about $7, nearing the bottom of the range. Kind of lows Friday's low, $18.63. Overnight, you were down at a price of about $18.65. We're trading right now $18.67, the price of gold. You got crude just under $80 at $79.29 for the price of crude. And notes and bonds, pretty much right where we began the program right now. Slightly lower price, nice and higher yield with the 10-year at about 3.72%. Let's check it out. Is that where we're at? No, we're at 3.74. Excuse me, 3.74 on the 10-year right now. And let's see how we react on the VIX with a slightly positive open. Yeah, see, this one's interesting, man. We're coming into the CPI. Pay attention to this one, folks, okay? You have the VIX opening up a full point higher from where we were on Friday. You have the VIX pushing the highs, as opposed to, take a look at the market, okay? The market was down at 4,060 at the low of Friday. We're now almost 50 points higher, and meanwhile, what's happening? We got volatility premium in this market, man, where you get the VIX almost back to where you were when the market was down at 4,060. We get a spike over the weekend. We're coming into some important CPI data tomorrow, and finishing up the conversation. Is this the article? Yes, it is. Finishing up the conversation. Third segment was core services, okay? Once food, and this is talking about inflation, right? Where we go, it's an important conversation ahead of the CPI numbers we get tomorrow, okay? Once food, energy, goods, and shelter are excluded, what remains are core service prices, excluding shelter, what some economists call super core inflation, all right? It's still running around 4%. That's according to Powell. Until it drops, we see ourselves having a lot of work left to do, okay? Powell and others have recently emphasized that wages constitute a large share of the costs that go into these services. So wages are a huge component of what is happening in this portion of the CPI. The shortage of workers worries economists and policymakers who see that as a conduit for inflation. Hourly pay for private sector workers rising at 4.6% annualized in the 3 months through January, compared with 3.3% in 2018 and 2019. Still well above where it should be for this portion especially to come down, because it's so dependent on what workers are making and what they're getting raises for and how that's contributing to the prices of what those workers are creating, right? While wage growth has shown signs of decelerating, it remains at levels that make it hard for the Fed to reach its inflation target. It's easier for inflation to go from 7 or 8 to 4 to 5 than it is to go from there to 2 to 3. And that's the thing that you should hang your hat on, folks, because this is the one that I really try to wrap my brain around, because, of course, it's easy to go from 8 to 5, because if you go to 8 to 5, that means over 2 years, you have inflation of 13%. Think about that, right? You're still going up 5 on top of the 8. When you start to come down to those numbers, going up 2 on top of 4 is only 6% over 2 years, okay? Because you're not dealing with even relative comps aren't even as high. We're beginning to accept 2, 3, and 4% inflation as pretty standard numbers. So what happens when we begin to accept 2, 3, and 4%? It's a lot easier for those numbers to squeak into our normal expenses, in my opinion, than it is for it to go from 8 to 5, because 13% is a huge acceleration over 2 years that everyone notices. The comps are important in how it goes, and the comps are especially important as you go from 4 or 5 to 2 to 3, as in you're comping against numbers that are really compounded year over year over year, for what it's worth. We'll see where we go from there. Got to talk a little bit more football and keep things in context. Of course, this is going to be the hot take everywhere. I am a Boston boy, New England Patriot fan. Of course, I'm a Bucs fan, especially when Brady follows me to Tampa to gets to play here. I'm a Lightning fan, man, because they are just a phenomenal hockey franchise. Hockey should be a bigger sport than it is. I'm digressing. Obviously a Bruins fan as well. Took Tommy skating for his first time ever. He wore a Bruins jersey, man. So we get that Boston Bruins blood in him. Mahomes makes the case as the new Brady. Let's pause all of those hot takes. Man, he is the next face of the NFL. The Chiefs right now are one of the, if not basically the only complete powerhouse in the NFL, as in they're going to be the perennial. No, listen, the Eagles are going to be phenomenal. Okay, there's a lot of amazing young quarterbacks. How about Cincy, Burrow? I actually thought that Cincy was going to beat KC in the championship game for the conference. Once KC won, I was thinking that they were maybe going to take out Philly, but I thought they could have done it, and they might have, man. That was a tough penalty at the end of the game that put KC into the Super Bowl. So a tough deal there. Here's what I'll say. I was saying to friends last night. Mahomes, he's 27. How cool is that, man? He's going to play for at least another decade probably, right? He's already got 2 Super Bowls. Even Brady at 27, though, he already had 3. He's got 7. Made it to 10 Super Bowls. The numbers are just like comic book-esque, folks, for Brady. So we'll see where it goes. He's got a tall order, but a good start, man. And it was a great Super Bowl. Kind of a bummer it ended on where it ended last night, but nonetheless, hey, you don't want to put yourself in that situation. 35-35, each team playing on a crappy field, and nonetheless, tough call. But yeah, that's how the games go, right? So, a new SEC rule target corporate insider trading. Loopholes will close for executives selling company stock. Interesting to see how this one plays out. Execs taking a lot of heat. For the last 2 decades, officers and directors seeking to trade illicitly on inside information had almost an infallible get-out-of-jail card. All they had to do was use prearranged trading plans when they bought and sold their companies' shares. The odds the government would target them were slim. And that was a 2002 rule that was abused, of course, and it's about to change. And there's been a lot, especially during the pandemic, right, where you got execs selling on some of these extreme run-ups on equities where they, tenfold, et cetera. Check it out. The average change in share prices 60 days after insider trading sales, grouped by days after the plan adoption. Okay, insiders who sold quickly after adopting preset trades on average received a higher price by selling early. So what do? You adopt a trading plan, and then what happens? You sell. Yeah. Average change in share prices 60 days after insider sales, meaning that among the highlights, officers and directors will have to wait at least 90 days after starting or modifying a plan before they can trade. It's amazing how, the simplest of things, right? Of course, they should have to wait before they put in a plan, because if they don't have to wait to put in a plan, then all they're really doing is selling, and they're just disguising it as a plan. Yeah. There's a lot that goes into these. Hopefully that's a good change, because it's somewhat undeniable when you look at the statistics. If you have some time, folks, in terms of insiders selling, putting together plans on very short notice. And the other side of that is you can always do away with that plan, right? So you put together a plan that you're going to sell. What happens? The stock doesn't go up. Well, you decide not to sell. Stock goes up. You say, well, I have a trading plan together. The plan says to sell, so I have to sell. Yeah, as they go. If you're watching last week, folks, too, I talked about a ProPublica piece talking about wash sale rules. Check that out as well. My dad and I were talking about it over the weekend. He was saying the last time it came up was in 2002, because you get these huge market pullbacks, right? And what do? You get tax harvesting when really people aren't selling at all. Anyway, simple stuff. Stay tuned, folks. We got markets in positive territory. Russell in the negative. S&Ps right now positive by 7. I'll be right back in 3 minutes, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the markets ticking higher a bit with the S&Ps up about 10 points right now. NASDAQ 100 up 51, the Dow up 75. Russell barely in the red right now. We jump around to some of the FANG stocks. We got Amazon opens down about 0.5%. Apple shares right now up about 0.4%. We jump over to Microsoft. Quite a week for them. Continuing the gain, up 2.6% to start off Monday trading for Microsoft. Looks like ChatGPT, man. And how's Google doing? Down 0.1%. You talk about a pullback on Google, man. This one, if you're able to figure out the long game in this one, and the long game might not take that long, man, in terms of the volatility. Heard some analysts over the weekend when I was watching them saying, listen, the short-term game, Microsoft's got them right now. You know, people are visiting Bing like myself. I've signed up for the ability to use that new Bing AI service as well. Haven't been to Bing in over a decade, so that matters, folks, right? I mean, if you said to me 3 weeks ago, is there any way that I can get you to go to the Bing website versus Google, I probably would have chuckled, but they got there, and that matters. But, there's always an important but, Google has been plowing money into AI, folks, and I imagine they have something that is going to be somewhat competent to that degree with ChatGPT and Microsoft, but they might have a new competitor on the block, and that might be enough, man. Google opens flat, but Microsoft, on a longer-term basis, jumping back. Quite the acceleration recently from about 220 to 270. You're up almost another 3% today. Let's see how Tesla's trading right now. Tesla shares down 2.6%. It's been quite a run for them to start off the year. Let's see how Cathie Wood is doing. Up about 0.4% so far this morning. All right, and let's talk a little bit more real estate. How about $12 billion, man? Remote work is costing Manhattan more than $12 billion with a B dollars a year. Pretty remarkable when you look at how our lives have changed and how that's going to shape everything that goes forward. Nowhere is the economic cost of remote work more pronounced when it comes to spending than in the world's leading financial center, New York. Manhattan workers spending $12.4 billion less a year due to about 30% fewer days in the office. Now, this figure is calculated by multiplying the annual inflation-adjusted loss in spending per worker, okay, by the estimated nearly 2.7 million commuters who worked in Manhattan in 2019. That means the average worker is spending about $4,600 less, $4,661 to be exact on their numbers. That compares to about $3,000 at San Fran and $2,300 in Chicago. $12 billion a year, 12.4, okay? Yeah, it's restaurants, right? It's retailers. It's other businesses in the area. That is a lot of billions of dollars every single year, folks. And it's got to come from somewhere, and it's going to reshape everything. The transit system's finances are in free fall. Not surprising when you got nobody taking the train compared to where you were previously. Chief execs like Goldman Sachs and J.P. Morgan Solomon and J.P. Morgan's Diamond are growing impatient with workers, and the fiscal threat to tax revenue verges on the existential. What is the value of a city when workers don't need to be there anymore? Things are changing, and they're changing fast, man. Yeah, I mean, I'm just jumping around where you want to go. There's a lot of good stuff in this article. If you get a chance, folks, I'll post this link in the Tiger's Den to this article. But yeah, to say the least, man, it's going to change things dramatically. And one of the things, and you've heard it before, I'm sure, okay, is that Class A office buildings, right, the best of the best, the creme de la creme, they're doing just fine, folks, because big businesses still need a physical presence, especially if they're going to be your mainstay property, okay? But second-class office space, you just don't need it anymore. You just don't. Not to the degree that you did. I wonder if those are going to get turned into either apartments, condos. Maybe there's areas that you've had that generation of office space that's now useless, that's older. Maybe that gets turned into mixed income housing, something like that. But it's shaping how things are changing. Now, this reminded me of an article I was reading. Now, this is an opinion piece, I believe. Yeah, over at the Journal, but interesting statistics. And there's a lot of numbers in here, okay? And it has a little bit of a political take, as many opinion pieces do these days. I'm biased because I live in Florida these days, folks. Taxes do matter, okay? And it's a bummer that things are so partisan with the taxes, because I would be pretty sure that a lot of people like paying low taxes, all right? You talk to people on both sides of the aisle in Florida, folks, they like no state income tax, okay? That is as clear as day, and that's not going to change anytime soon. But you know what struck me the most, folks? What struck me the most is, as recently as 2013, we had the same population as New York, right? And what's it now? 2.6 million people bigger. Florida, 22.2 million versus New York at 19.6, right? Top state income tax rate, 10.9 in New York. You add in the top income tax rate in New York versus Miami. Now they're just trying to compare it to anything. But you go into the city and you're talking about 14.8. You hear these types of comparisons in California as well. But those are taxes, okay, that do shape how it moves. But just look at the population, man. Just look at the population. 22.2 versus 19.6 over 10 years. So think about the changes that can occur over 20 or 30 years, man. And that's just Florida versus New York versus the changes that are taking place. And we are right in the middle of everything changing at a dramatically fast pace. I mean, the pandemic, if anything, just accelerated the trends that were taking place in our lives already. So take that one for what it is. Let's jump around to some of the Super Bowl ads. How about streaming? Streaming services for the Super Bowl, 7.75 minutes. So almost 8 minutes of national ads during the Super Bowl were for streaming services. No wonder they're losing so much money, man. Up from 6.25 minutes in 2021 and 3.25 in 2020. This year, that growth was likely to continue. The Super Bowl has now become a battleground for streaming wars. Yeah, streaming wars. You got to get those eyes, right? Among the entries, Fox Corp's free ad-supported streaming service Tubi. They're airing 60 seconds, they did at least. A 15-second teaser. Now, Fox controls things, so I'm not sure how that combines. I guess, it's inventory. They probably would have sold it, so it's a straight-out opportunity cost that they are paying. Nonetheless, it's their stream, it's their broadcast that they're running ads within. Paramount, they had a 60-second commercial in there. Paramount Plus, of course, one of their streaming services. And you also saw GM teaming up with Netflix, which is interesting. Peacock's in there as well. Yeah, so interesting to see how streaming. They're not done spending money just yet, that's for sure. All right, what else do we got pulled up here? Yeah, we talked about the $12 billion. Yeah, let's talk a little bit of Forex, man. We talk to our man Teddy Kegstad every Wednesday at 40 past the hour. Folks, Monday's always a great day to try out any of the newsletters we have. My dad's got a new gold report out there. Gold's been really rocking and rolling recently. Teddy Kegstad puts his Tiger Forex report out on Mondays. Of course, Basil, Chapman, Steve Rhodes, Dave White, outstanding letters daily that always come out. But if you're looking for weeklies, Monday's a great day to do it. The gold report, okay? The Tiger Forex report, and I always talk about, man, the Tiger Forex report, I mean, it's just shaping so much what's going on right now in terms of currencies are so related to yields, which are driving so much of what's going on. You got the dollar index down a little bit to 103.54, but the article I'm going to talk about when we get back, folks, we're going to talk a little bit of yen, U.S. dollar yen. We check out the yen. There's some volatility for you, man. On Friday, we spiked to 129.80, and just like that, we're charging higher to 132.64. We'll talk a little bit of yen when we get back. Yeah, talk about some weakness, man. Stay tuned, folks. Markets in positive territory, catching a lift. We're at session highs with the S&Ps up by 17 points. Stay tuned, folks. One more segment. We'll be right back after the break.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Apologies, folks. Welcome back. We got the S&Ps right now. You're positive by a 30%, up about 15 points. And we're going to jump to, how about those balloons, man? Now, we got people commenting that we can't deny they're not aliens. Nonetheless, the point to be made is just keep it on your radar, okay? Geopolitical tensions ratcheting up to the extreme level, man. China says the U.S. flew balloons through its airspace more than 10 times. Beijing says flights occurred since the start of 2022. U.S. denies sending them over. China says that they're just sending weather balloons. And hopefully it's all a lot of just talk and not action, as in things don't accelerate. But boy, not a lot of people, folks. It seems, status quo where we are with Russia and Ukraine. But not a lot of people thought that Russia was going to invade Ukraine and start a war that was going to last a year on that degree. Geopolitical tensions. And China versus the U.S. with Taiwan looming, okay, that's something that's not going away. And that will come to a head at some point, unfortunately. And maybe this is the beginning of it. Hopefully not, but you should be assessing that risk because we got so much going on in this market right now. Yes, China's getting a lot of stay right now, especially because the balloon became a meme of sorts that caught fire across the country, captivated the residents, so it's become something to the forefront. And now with it happening 3 or 4 times in the last almost as many days, keep your eye on it, though. Because, yeah, it can matter, and we'll finish it up with another China one. Interesting story from the Journal today, just saying basically, hey, China might not be the savior this time when it talks about the world economy. Okay, in previous times, they've plowed money, okay, into it. China has historically relied on government stimulus, right? They prop up that economy when they need to, but guess what? This time, no, they're in debt. Their housing market's struggling, and you talk about how much cash they have. Interesting here, excess savings as a share of GDP. Yeah, China, they're at the bottom of the rung in terms of the consumers having less than what we had previously in terms of those numbers. It's going to be driven by services spending at home this time, potentially China. So maybe not helping out the globe. This market, though, doesn't need help. It's trading higher. S&P's up by 0.4, folks. Stay tuned. Our man Basil Chapman's out one more day, folks. He'll be back tomorrow, so we just have a replay this 1 hour. But then we got our man Steve Rhodes at 11, Fast Market at 12, Larry at 1, David 2, my dad